So 28,500, 400. If we break below that, that is very bearish for Bitcoin.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
What's going on in the market? We're seeing the market selling off this morning. We have the S&P futures down over 20 points, NASDAQ futures down about 100 plus points. The kicker here is partly earnings, right? We got some earnings out of Netflix. We're going to discuss that in just a minute. But overall, really what's going on here is more than anything, you have some Fed commentary that is starting to spook the market a little bit. For instance, I believe there was one Fed, I don't know if it was Bullard, but he basically came out and said he doesn't see a recession and the Fed has to stay the course and continue to raise interest rates. Now, the issue with that is that we just heard last week from the Federal Reserve that we were going to have a mild recession. So there's this dichotomy, there's this divergence building within the Fed where some people are still saying, hey, listen, mild recession, but we're going to still raise interest rates. That's freaking the market out because the market is smarter. You look at the 10-year yield, it's all the way down. All right. You don't have the 10-year yield trading where the Fed funds rate is trading at 5%. You have it in the 3% range because the markets are anticipating that essentially we're going to have a recession. So these are things that are going on right now that we have to be aware of, and that's pushing the markets down. There's also another factor here, and this is something that I've been surprised has been a lagging indicator for the markets, that the markets have not picked up on. Not only did the Fed say that we're going to have a mild recession, but we also heard Warren Buffett last week say that one of his retailers that he owns, the year-over-year sales were down 22%. 22%. That is a massive number. All right, you know what the market did? When the Fed said a mild recession, when Warren Buffett said this, they did nothing but float. They floated higher, in fact. The market is ignoring things. And one of the sayings that I always tell people is this. I say, listen, guys, the market only cares when it cares. And it sounds like a weird saying, right? Like the market only cares when it cares. But the bottom line is what that means is the market will stay in a euphoric stage until it finally gets slapped in the face, realizes something is wrong, and then you see massive selling pressure. To me, that's telling you investors are saying, no big deal. It'll be fine. I'll wait a year. I'll wait 2 years. The market's going to be fine. The economy's going to be fine. That is incorrect, guys. And again, the Fed is telling us this. The Fed is telling us that we're going to see a recession. And by the way, I went off on this. I had a David Lynn interview yesterday. We talked about this quite a bit. But the bottom line is, if the Fed is telling you, let's be honest with ourselves. All right, this is look inside. Look inside. If the Fed is saying we're going to have a mild recession, and remember, their track record is that, oh, don't worry about inflation. It's going to be transitory. What do you guys think when they say a mild recession? Do you think it's just going to be like, nah, no big deal, mild recession? Personally, I'd be a little bit more nervous. All right. And again, that's the kicker. Not only that, but then you had, again, a Fed official this morning saying, hey, we got to continue to stay the course and raise rates. So at what point does a mild recession, which probably already means that they're telling you it's mild, but they know it's going to be worse, if they keep raising rates, what happens next? A mild recession turns into them telling you it's going to be a mid-level recession, and then it actually is going to be a much worse recession. And then you go, by the way, there are stocks out there, Apple, Microsoft, trading at valuations that they're almost at all-time highs. They're trading at forward PEs where they were a year or two ago when we had the bull market. That is not healthy. They are being used as a cushion. They're being used as a safety net. Those, to me, are some of the biggest shorts out there when reality strikes that we will see a recession in the second half. And it's not just going to be a small recession. It's going to be a long recession. We're talking about a long recession here. So in any case, bottom line is when we look at Netflix, guys, take a look at this. If Netflix dumps out, and right now it's trading down a little bit more, we're finally seeing some downside action on Netflix, a little bit more falling action. My big level on Netflix today, so there's a couple. The first one is going to be the 310 level. 310 on Netflix will be a little bit of minor support. We then have 293 to 294. That's the low from pre-market yesterday. That will be a technical buying opportunity. The first one, probably I don't do. The second one, I would consider day trading today. And then the third support is at 287.50, and that's a double pivot bottom. This morning, we're seeing technology stocks selling off, regional banks bouncing. Is there a money flow back towards regional banks that's going to put pressure on some of these technology stocks? And again, tech to me is way overdone, especially the large cap tech. All right. Don't forget, we're going to get into a couple other things here. But number one, we have to look at the earnings after the bell today. Earnings after the bell, we have Tesla. Now, Tesla's a fascinating chart here. So if we look at the chart right here, we had a wedge pattern. Notice you went up to the high end, you came to the lows, you went up to the highs, and then look, you broke. All right, now again, it's a break. But what have you formed off of this? A bear flag. That is a classic bear flag. Look at the sideways consolidation. And remember, a bear flag is denoted by a down move with sideways to maybe slightly up, 45 to 90 degree up angle. That's a bear flag. Just like the name says, bear flag means it can go lower. All right, price is already starting to break down because the markets are lower. Let's see what it does on earnings. On earnings, your first support's going to be 164. Again, earnings are after the bell today. So 164. For me, my big buy level where I'd play for a trade, if we got down to about 144, there's a major gap fill down there. That would be something that I would keep an eye on. But again, I did read this yesterday as well, is that there was an options trader that put a massive bet on the table that Tesla was going to collapse on earnings. Now, I want to caveat that by saying nothing that I've said here will get me to short Tesla into earnings, even though you have a bear flag, even though you have that options trader. And the reason I say that is because with earnings, if it doesn't work out, let's say somehow Elon Musk starts mentioning AI a million times in his conference call and the stock goes up, it can be a massive move in the opposite direction. So I generally don't buy or short stocks going into earnings. The reason is because it's a risk factor. Remember, everything we do here, everything I do in trading is all about analyzing risk reward. And if the risk is too high, why would I put my money at it? If I want to gamble, I'm going to go to the casino. I always say this to my traders. Go to the casino, get free drinks, hang out with your buddies, have a great night. You go to the casino not expecting to make money. If you're going to do a trade where it's 50-50, why are you doing that trade? You're not with your friends. They're not giving you, the market's not giving you free drinks. So think about it like that. You only want to take and initiate trades when the price action, the probability of success is heavily in your favor. That's why I use technicals. That's why I use psychology, because it puts me in that position. I know everyone wants to go over Bitcoin. We've got to go over this Bitcoin chart. I got to talk to you guys about this because the bottom line is with Bitcoin, you have to start to be aware that there are factors here that are going to cause issues for Bitcoin. All right, so right now, we are at a major resistance. I have said this till I'm blue in the face. The 30,500 level is the level to watch. A lot of people kind of round it down to 30,000. No, the technical level is the technical level, 30,500. Look at what we've done right along here on the chart. Bitcoin has hammered on this over and over again. This is the daily chart. We even had a doji right here, which is a bearish signal where it popped above and then got slammed down right to that level. I love how it flushed 2 days ago, rallied back, and now it's flushing again. The level I'm watching for short-term bias. So right now you're at resistance, but honestly, resistance can be broken. That's a possibility. But one of the things you have to recognize here is this longer-term trend line is that this is a long-term trend, right? You hammered on it here, you hammered on it right here, you broke above it, now you hammered on the opposite side. If we break below 28,500, 400 area and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend. So for me, you're now, and by the way, these two lines are going to meet. So this is going to happen over the next week or two at longest. But right now, look for this support line right here. Also notice, I want to show you this, how if we connect these highs right through here, this line actually merges right at that point. So 28,500, 400, if we break below that, that is very bearish for Bitcoin. Okay, the other thing I have to talk to you guys about is there's so much FOMO out there. There is so much. You go on Twitter, you go on Instagram, you go anywhere out there. Everyone's talking about alt season. Everyone's talking about this. The alts are going to start going 100x or 10x or 5x, whatever it is. My issue with that is that basically because that narrative is out there, everyone's already positioned themselves long. If you haven't seen the alts go yet, and everyone's already believing that it's going to happen, that's a very, very concerning issue.